Good morning, traders. This is Monday, the 8th of August, 2016. It's 8:02 a.m. Chicago time. Thanks for joining me. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. First day of the week, so we go through the normal routine of preparing for the day, but we also include a review of the weekly calendar. First, let's look at what could potentially be driving the market overnight and what the risk stance of the market is. Um, Crude oil's showing the strongest bullishness right now. Crude oil September is trading at 42.47, got as high as 42.71, up 1.6%. This is on news that OPEC will likely meet in September. OPEC members will reportedly hold an informal meeting on a possible production freeze alongside the International Energy Forum in Algeria on September 26th to the 28th. You'll want to record that date, September 26th to 28th. OPEC continues to monitor developments closely, is in constant deliberations with all member states on ways and means to help restore stability and order to the oil market, says Qatar's Minister of Energy. Other than that, we have the other push is from the DAX up 0.69%, the Euro Stoxx 0.4, the US dollar's up to 96.305. The Dow, Nasdaq, and S&P and Russell follow next, and then the rest are all negative for the day. The 10-year note, the Euro Bund, the U.S. Treasury bond, gold, the British pound, and the Japanese yen. You see that? You notice that group, the fundamental group, is down. Risk is on. The market's risk stance overnight is on, as opposed to off. As far as news is concerned, you all have probably noticed the drift in equities overnight as a continuation of Friday's trade. We'll go over that in a minute. Other news, Walmart's buying Jet.com for $3 billion to acquire a bigger e-commerce share as a competitor to Amazon. Just to tell you the scale of this thing, Walmart generates about 14 billion in e-commerce sales, online sales, compared to Amazon's 99 billion. So they have a long way to go. Berkshire Hathaway announced earnings. Berkshire Hathaway, which is led by Warren Buffett, reported $2,803 in earnings per share versus the 2,911. They did report 25% in net income to 5 billion. Delta Airlines, in case you're heading for the airport, Delta Airlines has grounded all of its flights nationwide and is rebooking many as their system has gone down across basically they're saying everywhere. If you're traveling Delta, it's wise to watch their Twitter stream. That's where they're pushing out status updates. Um, and then other than that, that's it. China trade data came out that shows that China trade surplus grew to 52.31 billion in July, and exports fell to 4.4% in dollar terms. As far as what is expected for the week, looking at today, to start with, we have a labor market conditions index, something I have not seen much of in the past. Labor market conditions index in the U.S. for July is coming out at 9 o'clock Central, 10 Eastern. The prior is negative 1.9. Other than that, the calendar is fairly clear. There's not much more to report here as far as events. Looking at tomorrow, we have China CPI, which comes out actually at 8:30 p.m. Central, 9:30 p.m. Eastern. China CPI year on year expected at 1.7%. German current account trade balance on the cash open in Europe. And then the UK has a slew of numbers, visible trade balance, industrial production, manufacturing production. And then the US gets non-farm productivity at 7:30 tomorrow morning Central, 8:30 Eastern. Unit labor costs, wholesale inventories at 9 Central, 10 Eastern. And IBD tip, economic optimism, for August at 9 Central, 10 Eastern. Wednesday, the key figure on Wednesday is the JOLTS job numbers and then the oil number and a monthly budget statement. On Thursday, German GDP and CPI. On the European cash open, UK construction output, and then on Thursday afternoon or Thursday morning, US time, or actually Friday, that's Friday. Thursday's fairly light. Thursday only has the import prices in the U.S. at 7:30 Central, 8:30 Eastern. On Friday, excuse me, is the German GDP and CPI, UK construction output, and then U.S. retail sales, as well as PPI core, and then we have business inventories and a University of Michigan conference in at 9 Central, 10 Eastern. That's how the week's shaping up. Let's look at how things shaped up on Friday with what was expected. Here's the review of the Trader Bite. We opened the gap after a blowout number, 255,000 jobs created versus 185,000 or something. And we had gapped up. We were pushing the all-time high when the Trader Bite was taking place, and you could see the current price versus the high are right up against each other. Let me switch this to yellow. So right there. So while we're doing the Trader Bite, the market continued to push highs for the session. The expectation was to open in a gap, test upwards, find sellers, and then potentially move down. The reason for that is because we were still trading in the balance zone, and the expectation is that much of the move had been accounted for. That was not the case because what actually took place is this: as Hypo 2, we did not get an open auction. As it shows here in Hypo 2, we got a quick push down, and what we had was an OTD type opening, open test drive. There was definitely a driving component to it, but we did leave the gap below, and we did push through the all-time high of 2172.75 as expected. So that's how things shaped up. Here's what it looked like. Here's what it looked like. A little pull down, and then immediately we saw a push up, pretty good pressure, and then the market just continued to drift up. And then as soon as the European markets closed, or just before, it sat sideways. The afternoon was terribly dull in the S&P on Friday, and you could see here we formed what looks like a P-shaped profile with a very, very blunt top, very weak high. So the expectation overnight, you have multiple highs at 2178. The expectation overnight is a continuation and a breach of that, which is what we got. We ended up pushing a lot higher in the overnight session. You can see here at 2183 was the high we put in. So that was Friday. Now, if we look at what happened since then, here's the overnight. So very odd. Friday did have a P-shaped profile and a very blunt top, which, like I said, that portends or generally predicts that it's like the auction is incomplete and it's likely to continue up higher so that it starts to look more balanced. We're looking for a taper on both ends. That's when an auction is fairly orderly. What we had overnight is this sideways box shape profile that dominated overnight. Most of the volume is right here. Note the volume is inside the overnight point of control is inside of yesterday's value. We didn't shift it up. It's at 2177.75 versus 2177, the point of control on Friday. And and it pushed higher and it pulls right back down. We've seen this consistently over the last week or so. We push higher, pull back down, and end up below the mid into the open. We did not have there wasn't enough time here in the session to push lower and form that thing I talked about last week, where we create an impulsive pullback and a most probable continuation pattern. We don't see that yet, so it kind of puts a question mark on the open. But overall, the point of control is right below, and it's in line with the prior day's value and point of control, and that basically says that overnight, even though we tested 2183, really a lot of the trading occurred at Friday's most valuable or most traded prices. So that's how things are shaping up. When we look at the overall picture, I wanted the weekly. Here's the weekly profile. Pretty solid. You could see the last 2 weeks here. Very tough trading from about the 12th of July. 14th of July, we had a gap, and we went completely sideways through the end of the month. It was really terrible. And then and then last week expanded that range quite well and traded quite well. For those of you who attended last week's Trader Bites, I did mention that the auction seems to be a lot more orderly now that it's released some. So overall, you can see that there's a peak pattern here. The point of control has not shifted up on the weekly, but we did have a week high, and again, we expect this to level out. We're looking for something that looks like this to tell us that the auction is done temporarily, and we have not seen that yet. Okay, so what do we have for today? We have all-time highs on Friday. We have a gap below. I actually updated the flex levels, and I neglected to add in the gap zone. I will add that for those people who have these flex levels on Investor RT. You'll see a shaded area come into here, and you can see the confluence here with the composite low volume node in that area. That's going to be an important area once the market starts shifting to it. But overall, the market is in new high territory up here, and we're opening in a gap. My suspicion is, and it's been tough to read what it's likely to do because we're getting a lot of OTF involvement. My suspicion is it's likely to be another one of those drift up or drift sideways, test down, start drifting up very slowly type of trades. It's not my favorite kind of trade. It looks something like little chop, little drift down, and then as soon as it finds its buyers, it starts to drift up. And there's a chance that we could break into this 2177 area. And that's okay too. The target above is 2185. If we don't go down much, then the target needs to be higher. But that's the primary hypothesis. We have to go with the break of the balance of this multi-day flag and a continuation higher. We do have some weak structures below. Again, we have a gap zone from Friday. But the suspicion, the expectation is that this is likely to move down, find its buyers, higher time frame buyers, and then continue to drift up. I do not like this kind of market because it's a buy and hold market. There's not much participation or movement in and out of these products of equities. If you're owning a stock and it's continuing to climb up, there's not a move you can make, and that causes low volatility, low volume, and it's generally not great for the short time frame trader like I am. And so what you do in those situations, as I talked about over the last few weeks, is you pick your spots. You just simply have to wait. This is not your cycle. This is a low volatility cycle. This is a directional cycle. It's not your cycle, and it's best to just pick your spots, wait for your setups, take them, and then just call it a day. And it's that's what it is right now. It's a grind. Hypothesis number two: open auction, attempt higher, and then find its sellers, and then start driving towards 2177. I expect that it will come back out, push back in, and then start drifting up as well. We saw that a lot over the last couple of weeks, and that's what I expect hypothesis number two to be. Hypothesis number three is the same: drift sideways, test higher, find sellers, drop, and then attempt to push out of Friday's range and then start working itself back towards the prior all-time high at 72.75. That's hypo 3. This morning, I'm going to be very cautious. The Monday after the non-farm payroll is generally pretty quiet. It's not the greatest time to stick your neck out. So I'm not looking for anything substantial this morning. I'm looking for lower volatility. Generally, Tuesdays after non-farm payroll are the better trades. So save your bullets, keep your powder dry for today, and just pick your spots. I'm not saying don't trade. I'm just saying just make sure you pick your spots. Okay. Finally, I want to remind everyone that we do have an open AMA on Wednesday. The open AMA is at 3:30 Central, 4:30 Eastern. It is for anybody. The invitation is in the description of this video. If you're watching this video, a couple things I really would like you to do is hit the like button on the video, but also look at the description and register for the webinar. There's a link in the registration there, the GoToWebinar registration. There's a link to submit a question. The cutoff is 25 questions. I can't do more than 25 questions at a time. We'll try to keep it to about an hour 15. So that's Wednesday. And then on Thursday, I'm doing part 3 of the education mini series for Futures IO. It talks about trading habits. And part one and two. Part one was the technical side. Part two was mindset. Part three is trading habits. So what does it take to get to the point where you're a fluid trader? That's what's going to be covered on Thursday at 3:30 Central, 4:30 Eastern. Look for the invitation. You'll see it on my website for both Wednesday's event and Thursday's event, and you'll also see it on Twitter. Thanks for joining, and I'll catch you tomorrow. Take care.